All righty, traders. Sorry, I was running just a little bit late. I was just letting folks in the chat room know how to get into the morning edge here. So bear with me, and I'm gonna grab a drink of my. Excuse me, really quick. I'm gonna grab a drink of my coffee, and then we're gonna get started. All right. Okay. All right. All right, let's get to it. So, good morning, everybody. And I want to say first of all, you probably have noticed a few changes in the in ForexAnalytix, the chat room, some people that are around. I want to talk a little bit about this because obviously, we're making a big announcement tomorrow. We're trying to get some of the people that aren't normally in the ForexAnalytix community that maybe have been there and have left over the years, that just trying to make a bigger announcement for tomorrow. But obviously, for those of you that are already listening in and you guys are already in the chat rooms, you already know that we are for all intents and purposes really merging with Ryan and the Forex Flow live team, and it's really nice to have them in our community. But I want to talk about just a couple of things regarding like our chat rooms, just so you can, I want you to see a few things here. This is the chat room. And what you'll notice is this is our general chat. For those of you that have been in ForexAnalytix or been using ForexAnalytix for, for a long time, this is just the general chat room that has always been there. We have our Spanish chat room. We have a Pepperstone chat room that you will not be able to see. None of you will, because we actually disengaged it, but it's still on my screen, but it's not used. Now you're going to notice here where it says traders room, it should say trade room. Okay. This is we're getting this adjusted today. Instead of traders room, it says trade room. Trade room is basically where, if like, let's say you're not, you haven't been listening, you haven't been around for a couple of days, or you're just tuning in, after you were asleep, and you want to see where everybody's kind of position and what they're trading. The trade room should be where you post, hey, I'm buying this or selling that here or there. Just this way, it's an easier venue for people to follow up on. The news and research, this is where you upload links. You guys can upload links to here as well. So like, let's say you get a research piece from Wells Fargo, and you wanted to upload that analysis here, you can upload files here. If you see a good tweet that's an analysis tweet, you put it here this way. So, if I kind of want to get caught up in the morning, or you want to get caught up in the morning after sleep, and you're like, oh, I want to see what's happened for the day, you can go over here. So this is a great news and research tab. Will be nice. So you can see we have a little bit of segregation here for our chat room. Sorry, I'm yawning. I didn't sleep too well last night. It was very warm here. It's warm and humid, so it's like, ugh. Anyway, so excuse me if I yawn a little bit. But anyway, those are a few things that you've seen changes to the chat room. Now, what a couple other things you might notice is, if you're on the ForexAnalytix platform, go over here where it says market info. First of all, you had your bias chart, right? Everybody can see that, right? Everybody see my screen? You guys, in the chat room, you guys, or you in the chat room, everybody see my screen? Okay. Now, right over here where it says orders and options, this is where you're going to see all of the options barrier information, expirations. This is good information that Ryan and his team is posting. So you have the bias chart, obviously, and the orders and options. So just keep that in mind. And if you're not in the chat rooms right now, because you're using a light version, hey, this is still available to you, which is this is a lot of very, very valuable information that you're going to get. Okay, so anyway, I hope you guys are having fun. Oh, Alex says you don't have access to the current tab. You have to upgrade your plan to premium from settings. That appears to be in orders and options. Crap. So that is that is an upgraded feature. Oh, all right. It is an upgraded feature. All right. So what I'll do from time to time is, especially for you guys during these webinars, is I'll go to orders and options and I'll just kind of reference like some of these big options that are here that, if they're really, making a stink about it, the market's making a stink about it, we'll reference them here. All right. Sorry about that, guys. I wasn't 100%. I don't make those decisions. Sometimes things happen and I'm just not privy to all the information, especially from a technology standpoint. Anyway, well, I hope you guys are enjoying everything. We're going to get through the analysis. Let's get to it right now. And I want to say that one of the things that we were talking about is, man, on the FA.C.E webinar, I hope you guys weren't really long the dollar going into this number. I think that this 117.75 is so key. And we're back at 118. I thought that was a risk from earlier. Now I'm going to reference couple levels right now. I don't necessarily think it's time to be bearish the dollar outright. I do think that we could bounce today. So let's just take a look at like I think these are the levels that we have to be mindful of. So this trend line in the euro dollar, let's figure out where that is exactly to be right here. So that's going to come in at 118.35. So 118.35, and now these lows today at the basically 117.65. That's going to be key. So let's go ahead and write those numbers down. 117.65. That is critical support right now, and resistance 118.35. Now, for those of you that don't, or excuse me, if you're new to me doing the bias chart analysis with you, let me kind of explain it to you really fast so you have a good understanding of what this all means as I build it out. So when we talk about important support and resistance levels and what our biases are, the bias for me helps me identify when I'm trading counter trend or not. Like for example, if you bought the euro dollar today, during the FA.C.E webinar, you bought it because you're like, okay, Blake was saying it was a really key support at 117.75. Don't get too excited if it's below 117.75 because we're really just kind of at real key support for the day. And you went long. Well, it's fine if you go long the euro dollar. But if you know that it's counter trend because we're in a bearish trend, then you know to take a smaller position. You know what I mean? So just to take a smaller position so you don't so you're not like aggressively trading counter trend. That's the way I look at it. Like I've identified with you guys that the euro's been in a bearish trend in the last several weeks, and and it has. We've been, ever since we pivoted off this 120 150 level, we've said, oh, lower highs, and we're probably heading back to triangle lows. Here we are. So now that we're here, the question is, do we stay bearish? And my opinion is yes, we do stay bearish probably until we get past the ECB. But really, we have to start breaking back above, here's that 118.50 level. We really got to start breaking above 118.50, 118.85 for me to change my tune as far as the euro dollar goes. So we have a lot of work to do, but I think right now we stay bearish, right? And obviously a break below this 117.65 is going to be a very bearish event. And that's why I put an asterisk there. When I put an asterisk, that's just suggesting how important these levels are for us at this moment. So hopefully that helps you get a better understanding of what I'm doing with the bias chart. So again, the bias chart doesn't say, oh, I'm bearish and I'm targeting here necessarily. No, that means we're bearish. It's a bearish trend. If you decide to trade counter trend, you're going long. If you're going to go long and you're going counter trend, take a smaller position so you don't overexpose yourself, right? And obviously we know where support and resistance levels are, and if we get towards a support or we get towards a resistance, we need to be a little bit more careful with price action because we might get price pivoting off of those levels. Okay, hopefully that resonates with you. Let's take a look at the sterling. So the sterling is approaching really critical support. This is so key. You guys know that if we break, and let me go ahead and put this up here. You guys know if we break these lows here, that triggers an automatic double top, which means to me that we're going to be looking for a move down towards 131 over time, not like tomorrow. We should eventually trade down to 131 over time. Personally, I think that's going to happen. Wow, this euro is really spiking higher. I almost want to short it up here. Golly, did I miss some economic data this morning? Did something really happen?
Nope, there's nothing.
Jesus, I might actually sell some right here. Let me think about that. Boop, 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 boop. It's just a little overbought intraday. I'm going to sell a little bit at 13. I just sold some at 13, and I'm not going to stick around too long. So just letting you guys know. That's a little overbought intraday. Look at the relative strength on a 15-minute chart. I just sold some at 13. I'll just try to make a quick 10 pips on it. Anyway, that's crazy, huh? Nice little squeeze-a-rooney there in the euro. All right, let's go over to the sterling. So here's the sterling, and again, one of the things I want to point out that this is really critical is this 136. I think it's 136.65, 136.70. So I don't think we're necessarily getting down there today, but it is really key support. Obviously the 127% extension of this last range comes in at 136.74 because all RSIs are divergent. Yeah, I don't even know if we're going to reach for that today, but I do think that any move back towards this previous support here is going to find sellers, and especially up here. So, which would be right here at 137.50. So 137.30, 137.30 will be resistance today. I still think we're bearish. Just you have to be really careful as we approach this support. And 137, I'm going to write down 137.50 just in case we squeeze past that. 37.50. Okay. Let's go over to the Aussie. So the Aussie, I do think that Aussie is or was a little oversold here. I'm surprised we actually reached as far as we did. Any rally back towards 74 cents, so 74.10 should be sold. I would be really happy if we made it to 74.10 because I would be a seller there. Let's mark up today's lows as key. That comes in at 73.27. I'm going to just write down 73.25. You guys know that I think that the Aussie is eventually going to make it down to the 72.50 level and maybe even further. And I'm just hoping, those of you that know me already, that I'm really just hoping we reach for 70 cents because I would love to be long the Aussie down here. Longer term. I really do. I really want to be long down here. I just don't know if that's going to happen or not. Here's the Kiwi. We are at wedge support right now. Nothing's changed from last week other than we are testing support. So that support 69.20, we've written that down a bunch of times this last week. So 69.20 continues to be really key support. Okay. And you know, I've been waffling between putting this in bearish and just keeping it in range. I'm going to keep it in range because it has been outperforming the Aussie very well. Okay. Resistance at this point, this is key, which would be this trend line, but more importantly, it'd be right here. So this is 70.45. I think the Kiwi has been acting a lot better. Look at this. Dollar MEX is coming off pretty aggressively. John says the bias levels line up quite well with the projected ADR 20. Oh, thanks, John. That's good to know. Moving right along, dollar Canadian. This is the 100. So we have a, let's stop here and dissect this chart a little bit. So bull flag is played out. Okay, we've broken out through this horizontal resistance that we noted last week. It was 161% extension. We knew that 126.50 was going to be big. We broke above it. We squeezed the hell out of the market after we broke that in Europe. I mean, that was a big squeeze. Now, the fact of the matter is that big level on the way up is going to be a big level on the way down. So any move down to 126.50, I'm going to be adding. So you guys that are not in the chat room, you're not in the chat room. You're on our light version of ForexAnalytix. Okay. I have just taken off half of my exposure on the dollar CAD, dollar Norway, dollar Mexican peso about 45 minutes ago. Okay. I am adding those back on a dip. So I was looking below 127, but I think I'm going to try to wait till we get to 126.50. But the Canadian, in my opinion, is bullish. Okay. This is bullish. We're just a little overbought this morning. The 127% extension comes in at 128 and a quarter. 128 and a quarter right there. That should cap us today. We shouldn't make it past that. Okay. This will be key. I just need to put an asterisk here. This is really critical support. It's got to hold on the way down. Now, yeah, we can drop obviously a little further than 126.50. I just think 126.50-ish is going to be really big support. Swissy, stuck in this like descending channel. Don't get too excited about this. I'm not. And with yield so heavy, it's just not following the rest of the dollar pairs right now. So we should find resistance at 92.40, support at 91. And you guys know I'm so unexcited about this one right now. So I'm going to keep that in a range. Dollar yen trading. Well, I'll get to dollar yen here. And here's dollar Norway. We were overbought intraday. 4-hour chart was reaching overbought, and you know, for all intents and purposes, this this triangle has completed, right? So if you're long US dollar Norwegian krona like I am, you got to take some off, right? I mean, we've basically, I'm trying to grab that. Okay, damn it, mother son of a gun. Okay, here we go. So let me just show you. Triangle, extension, target met. Okay, what should happen now? In my opinion, we'll probably do this, right, and continue higher at some point. So, oh wow, this euro is just squeezing. Holy cow, man. So I expect like a move or a support 880 to hold on dips. So if you took some profits here, okay, trying to buy the dip back at 880 makes a lot of sense to me. Resistance 896. Okay. All right. Dollar Mexican peso. So you guys know 2010 big resistance. I think we wrote that down all week last week. 38% retracement right there. So it's all the same. So now support 1985. You want to buy some down there. That seems like the more logical spot. I know we've been writing down 2010. I'm going to write down 2011 since that's the 38% retracement. Being a little bit more granular with my analysis with the dollar mex, since we're coming so close to that resistance now. It's the 38% retracements there. Moving right along. Here's the dollar yen. Okay, so dollar yen. Let's figure out where. Let me grab this fib. That's the low. This is the high. We're at the 127% extension. This should hold here. Also, 618 of this move comes in right here at basically 109. So we have 109.20, 109. Those are supports. 109, 109.20. Those are supports. I do think we're in a range in the dollar yen. I know some of you might be bearish intraday. I just think that it's longer term. We're in a range. There's nothing to really do longer term here. I think we sold off today. We're probably going to bounce back. See any rally back to 109.55 should be sold because that was previous support, right? So if you get to 109.50, like if I was, I'm not trading the dollar yen right now, but if I was trading the dollar yen, I'd probably be looking for a bounce back to 109.50, maybe even as high as like 75, and then look for a short up there. That's how I would approach it. Let me put this down, 109.70, right? Because then it's challenging this previous support. Okay, so you might look for a sale up at 109.55, maybe at 109.70. That's the way I would be approaching it personally. All right, dollar index. Nice little false breakout of that triangle today. Should have support on dips back down to 92.40. Resistance should be at, that's an 88% retracement too. Of that high to down there. That comes in at 93.04. I think we've been writing down 93 all week, right? Let me make sure I got that correct. 92.85 on Thursday. Friday, I believe I put in 93. I'm pretty sure I did, but you might have the bias chart from last week. I remember I deleted it on accident, as I said on the FACE webinar. But anyway, 93 is going to be key. So that is key resistance moving forward. That means if we get a daily close above 93 this week, and I do think it's still bullish at this moment, but if we get a daily close above 93 for this week, I think we're going straight to 94 personally. And that's going to be a catalyst driven more by the ECB than anything. Okay. Hold on really quick. I'm going to add a little bit to my euro exposure here, just a wee bit. Hold on. Okay. All right, let me to gold, silver, Bitcoin, and the S&P. So S&P, you guys have seen this chart about 1,000 times today. I'm sure you're sick of it. 127% extension comes in at 42.60. Trendline support, you could round it up and say 42.60. I mean, that's just it, right? Around here. And you guys have heard me say a million times, support and resistance is not an exact science. These are just, this is going to be a zone here. Euro Aussie spiking up. Crap. My stops it's getting close to my stops. I'm short Euro Aussie. I thought a bounce and risk today would lead the Euro Aussie higher, but stocks are still staying pretty weak here. Anyway, what I would think, if we get a bounce from this support, we're probably going to be bouncing to somewhere around here. I'm just thinking out loud. Okay. So that level would be at 43.40. So first resistance is going to be at 42.90, and then 42.90, we get above that, we'll probably see 43.40 again. Still bullish. Okay. Gold and silver. Okay, so silver just hit, this is the trend line that we had drawn already on my, All right, so we broke below that 25.50 that, you guys remember we wrote that number down probably every day last week. Okay. We broke that 25.50. We've now challenged this trend line support. That's holding. That comes in at 25. That should hold for today. Should. I'm going to put an asterisk. And unfortunately, if we break below the 25, I might have to flip us to bearish, but that's been in range for a while. Resistance should be 25.50, 25.75, roughly. We're going to keep it in range. Gold coming out of a little of a wedge, but this could actually end up being just more of a channel. I don't want to get too terribly excited about gold.
I have it as a wedge as well, despite being long-term bullish. I thought that I had silver in a rectangle and gold in a wedge.
Yeah, you know what I'm going to do, Steve, is I'm just going to note that we had rejection here at the 50% retracement. Let me get rid of this for now. 50% retracement at 1835. I think any dip down to 17, you guys remember the 1760 level is going to be really important, 1755. So I don't think there's anything to do here. So 1835, 1755, which is key. And I'm going to keep us in range because I'm not really excited about doing anything with precious metals at this moment. There's nothing to do, I don't think. All right. Last but not least, let's take a look at, yeah, come on down, Euro Aussie. You're scaring me a little bit there. Bitcoin is really vulnerable, in my opinion. If we break through 30,000, that should take us right to these spike lows, which is at 28.7, right? So I'm writing down both numbers, 28,700, 30K, and that is very important support. Obviously, I got wiggled out on Friday like a damn wussy. I just got wiggled out so bad. 36,500 still key resistance, and I cannot believe I'm such a wussy. All right. And obviously Bitcoin is bearish. You guys know while we're below the 200-day moving average, we stay bearish. By the way, US dollar Norwegian krona is bullish. Dollar max is in range. So there's the bias chart. It is finished, guys. Hey, listen, if you're new to the morning edge that we're doing right now, and this type of analysis, I just want you guys to know I've been doing basically an iteration of this type of analysis for over 20 years. It became really popular with some of the people that you're going to meet in the chat rooms have been listening to my analysis literally for 15 years. People like Rick, Chi just opened a restaurant in New Jersey, so he pops in every once in a while. But Rick, God, I'm trying to think of all the names. Like Greg's been around for like 10 years. or so. Nitish has been around for 8, 9, 10 years. So a lot of our people that are used to listening to me on a daily basis for 10, 15 years, they've heard me do this type of analysis for so long. It's not like anything new. I'm not going to tell you it's right for you. I never suggest that. Everybody's different as traders. We all have different approaches, but this just kind of a approach that helps us have some sort of plan every day. What's the trend right now, and where are the key levels that we need to be aware of intraday. That's what's most important to me with this analysis. And hopefully you enjoy it, and we do it every morning. So just and it's obviously, if you're part of the ForexAnalytix family, if you're Forex Flow Live, ForexAnalytix, this is all available to you, whether you choose to use it or not. So anyway, but the good news is it's not over yet, because Steve will be here going through some charts, and we're going to make sure that we get. You notice that Ryan, he may be listening in right now. I'm not sure, but he's going to be popping in live and giving some analysis, throughout the trading day as well, live, so you'll hear his voice. Rick says, I've been listening since 2003. And this is Dean from Oklahoma. I have not been in chat much lately, learned a lot, or would not still be here. So thanks. That's Dean in Oklahoma. He goes by Ricky, I think is more of he comes in as Rick, but Dean in Oklahoma is his call name in the chat room. So thanks, man. It's good to hear from you. 2003. It's a long time. 18 years. All right, guys. I'm gonna let Steve take over here. Steve, Stelios, how you guys doing?
Hello. All good. All good. Yes.
That was a nice little squeeze in the euro. I think we can go higher, obviously. And by the way, Stelios just uploaded the newest bias.
Did you upload it?
He uploaded it. We got maybe another 20 pips in us, but man, I don't know if I'd really want to be after a squeeze like that. I mean, on the FA.C.E webinar, we were trading at 117.70, and I was like, man, I don't know if you want to be short down here. And then nice little squeeze. I have a feeling we'll just be like bebopping around here, but who knows?
Yeah.
What are you guys thinking?
It's been an interesting start of the week, without a doubt. I'm a little bit scared because I've seen this year so many promising technical reversals that had no follow through, right? Which I've never seen so many of them in the past.
Right.
Having said that, as I said before, I've been saying that I do believe we're going to get some type of a sharp reversal during the summer, because if you remember, Blake, usually all these years that we've had this, mostly this slow grinding higher environment in stocks, we've had some summer surprises, right? With volatility picking up and, and we're long overdue for one, right? We're long overdue for one.
Yeah, sure.
Also aligns well with the possibility of one more leg higher in the dollar, because logic says that, risk off should somewhat help the dollar. So I'm hopeful that being the start of the week, it's indeed going to bring something that's going to stay with us for at least several days to be able to do some healthy trading, right?
Yeah, let's hope the volatility stays a little higher and elevated here. Dollar yen's at lows, and usually just make sure everybody knows when we're referencing the dollar, usually the dollar yen's on its own program. When we're talking about the dollar, it's usually against every other currency but the yen. So, but I'm gonna let you take over, Steve. I gotta go. I gotta take a little bit of a break. Thanks everybody for tuning in today or with me, but stick around. This webinar is for you. Steve's going to cover other assets. Same with Stelios. They're both here. So crude. Oh my God.
Yeah.
Oh my God. Oh my God. Oh my God. We're almost there.
Yeah. That was also long overdue, right?
Yeah. Yep. Thank God. All right. Let you guys go. All right.
Okay,
Thank
mate.
you.
Cheers.
So oil, now that we're talking about oil, we didn't mention it on FACE. OPEC Plus, they agreed to extend the increase in supply until the end of next year. It was, I think before it was mid-year or something like that, so they're extending it. And that was a really nice rejection of that 75 to 77 resistance zone. That was really nice.
Yeah, after Stelios, after getting like an incrementally higher high, right?
Yes.
From that high, the usual devious market.
Yes.
We got like a few cents above it intraday, and that was it. That was the end.
Yeah, it was a bit tricky. And the other thing we need to talk about, which we didn't on FACE, was that the UK government said, or rather they warned, there's a source that says the UK government could warn the EU leaders that it's going to move away from the terms that they agreed on the Brexit deal. I can't believe I'm saying these words.
No more drama, please.
If the EU are not more flexible over the Northern Ireland issue. I don't know what the details are, but we have a split. The UK, I think, are due to pay a big number of, I don't know how many billions it was. What was it, 50? I don't know. It was a big chunk of money, and they might try to renegotiate. I don't know, but basically, this is probably the reason why the pound is losing ground against the dollar and the euro. It's up over 0.5% against the euro. So, euro pound is up over 0.5%. So,
speaking of which, Stelio, it's one of the pairs I would be talking about, because after like a prolonged period of producing this descending triangle and RSI literally being stuck at mid-range, it seems that today we might be making an attempt. Of course, it's still early in the day, but we might be making an attempt to finally break out of this. And if that's the case, then we're talking about a breakout to the upside.
Yeah. There you go. Jane says the EU says 45 billion and UK say 35 to 38. So we're in the haggling zone now.
Come on, what is like 10 billion?
10 million among friends, right? Just get
I mean, it's like one day of QE in some cases.
Yeah.
Like, no, I'm exaggerating. Like 5 days of QE in some cases. Come on.
Yeah. Otherwise, I think what I'm really watching now is Bitcoin. It's so close to the 30K mark. And we've seen Bitcoin move, 10, 15% in a day. I don't think it's unlikely.
Its inability to break out is very, very worrying for the bulls. That's all I have to say.
Yes, and remember we were saying the longer it stays near the bottom of this bear flag, whatever you want to call it, Bitcoin. I mean, it's the more probable I think it's going to break down. And look at it.
Mm-hmm.
It's breaking down basically, pretty much.
Yeah, it's not looking good.
No,
it's not looking good. I think there's more pain to come in this market. And if you remember, we had the same conversation a few years ago. We even made a clip out of it when we made a clip for FACE. It was included in there when I was, telling people that were naive enough to believe that for a period of time that it was like cryptocurrencies might even be like uncorrelated to stocks, you remember, and risk assets.
Yeah.
And I was saying that, there is no chance if we get like a risk of moving risk assets, we're going to get Bitcoin dumping. And then that's what happened. So if, this is a big if, I think that if this is the beginning of some decent risk of moving equities, I think this is probably going to be the catalyst for Bitcoin and Ethereum and the rest to sell off as well.
Yeah.
Which they did prior to this anyhow, but I think it's going to be like a push in the right direction.
Yes, absolutely. And then we get close to the magical 26,000 level and we see what happens there.
I actually think, technically speaking, I think that 26,000 is an important level for reasons we've explained in the past. But technically speaking, I think we're going to slice through 26 like it was never there.
Yeah.
If we break through 30K, I think 26 is not going to be the issue.
You could be right. Yeah. Not much more to say. I mean, it's weak all around. The DAX particularly is really weak, and but yields are dropping. What 10-year US is almost to 120 now.
Yeah, speaking about the DAX, Telio, the S&P might not have broken down yet, but the DAX has already broken out earlier in the day. I was monitoring this wedge, and in my mind it was a 50-50 chance. Actually, not a 50-50 chance. I gave it a little bit more chances to break to the upside, just because the inclination of the wedge was not steep, right? But of course, it could break in either direction, and we seem to be breaking decisively lower. I mean, because it's not just breaking through. It's like, the manner with which we do it. And, there seems to be a lot of momentum. I mean, we're more than 2.5% lower in the day, which for rather recent standards, 2.5% is a pretty decent move, right?
Yeah, but personally, I think market should be lower. It's a healthy correction. A correction, lower is a healthy thing, and it's long overdue. But you know how it can happen, right? If we get another day or two of this, somebody's going to come out, say something.
Oh yeah, absolutely.
And try to control markets, and then we go back to.
Now, I watched Peter Goodburn. We had him on. We had him on Trader Summit as well. He's an excellent Elliotician, an excellent technician of Elliott waves. He's very pessimistic, looking for much lower targets. First of all, I need to reiterate to people that even Elliott waves has alternative wave counts, right? Because there is a decent ability for somebody to interpret in different ways waves, meaning where somebody thinks that a wave 5 is beginning, somebody else might still believe that this is the extension of wave 3, and there is yet a wave 4 and 5 to come. I'm just giving a very simplistic example. In any case, though, if we assume that such a scenario can manifest from here, the only fundamental scenario that I can see supporting a big sell-off in the markets is the following scenario. Let's assume that we get, let's say, COVID again being the trigger. Let's say that indeed Delta variant or whatever, E variant or whatever new variant comes up, ends up being, seriously disruptive to economic activity for reason A, B, C, be it that many people are not yet vaccinated or don't want to be vaccinated, be it that vaccines might not prove to be effective enough, or it doesn't really matter the reason. To be honest, Celio, there is going to be a huge conundrum because idiotically, in my opinion, and I said it back then, they didn't hesitate to throw a literally crazy amount of money in the market to support it and to the economies to support them during COVID, because many of that money were not used properly. But in this case, with inflation now being above 5%, if such a scenario manifests, if that's a big if, it's not going to be as easy as before to say we're throwing trillions and trillions in the economy again, because supposedly they still accept.
Give them a lot of credit, man. They're going to do the same thing.
I'm not sure it's going to be that easy with 5.5% inflation, reported inflation, Stelio, and climbing.
Yeah, we've talked about that.
I mean, it was much easier before, but in this case, I think that they might have to be a lot more, careful, and they will have to decrease the amount of money. Do I believe they're going to be throwing more money if that happens? Yes, I do. Do I believe it's going to be even close enough to what they did the previous time? No, I don't. Because, there is a limit to where inflation can print and still claim that it's all okay and they're doing their job. Because their job, first of all, is price stability, right?
Yeah.
So, that might be a scenario that can be extremely, extremely bearish for the markets. Now, having said that, you all need to be extremely prudent because, as we said, a single bad day in the markets, or even 2-3 consecutive days in the markets, are not enough to eradicate, such a bull market, right? Now, having said that, and looking shorter term, S&P is testing as we speak this big ascending wedge trend line support, and this ascending wedge dates back to November, so it's like not like some kind of a technical formation that's completely irrelevant, right? It passes through 3 points, 1, 2, 3. This is the fourth, in essence, test of this trend line. So this is an important level, and having to do with the Nasdaq has already broken out. It actually closed on Friday on the precipice of a breakdown. And today it just immediately started trading below it. And add to this the fact that technically speaking, we've always looked at this breakout to have a target of 14,960, which is in essence where we stalled. I mean, yeah, we made it like exactly to 15,000. So we made it like 40 handles higher, which at 15,000, it's a completely irrelevant percentage points, but amount. But in any case, we're seeing a breakdown here. We're seeing a breakdown in the DAX, and I'm mostly focusing on major indices because that's where the global investor is looking towards as well, right? So we're breaking down the DAX, we're breaking down in the Nasdaq, and we're about to break down in S&P as well. S&P, especially being the global barometer for risk. Right. So these can be important developments. On the other hand, it remains to be seen what the dollar is doing. Because if we're talking about the dollar in terms of the DXY, the DXY is still trading within this ascending wedge. And actually, due to this little rebound we saw, a while ago manifesting the euro, the DXY is getting rejected from this ascending wedge trend line resistance once again. So yeah, it's interesting because equities seem to be breaking down and the dollar is refusing for the time being to break higher. Now, we said, both you and I, Stelios, a long time ago, that we think we're in an environment where the dollar is mostly bearish, meaning, yes, a risk-off should help the dollar rebound, but the rebounds in the dollar should be weaker than the sell-offs in the dollar, right? So I think so far, this is a confirmation of what we've been saying. Yes, the dollar can, of course, rebound, but the rebound of the dollar should be of much less strength than the sell-offs in the dollar, simply because fundamentally, the path of least resistance for multiple serious reasons remains to the downside, and until proven otherwise. Of course, if and that's a huge if, as I explained before, if we enter some kind of a period where risk off is prevailing, yeah, it's going to be impossible for the dollar to break down, but its rebound might remain unimpressive on the other hand. So yeah, it is what it is. Now, having to do with precious metals, this is how I was looking at gold. By the way, keep in mind, gold produced an evening star formation on Friday, combination of these three candlesticks. So far, gold has completely recovered from the lows of the day, but still within, below actually the broken wedges trend line support. And silver has already broken down from this flag. Now, theoretically speaking, as we've said before, there is more room for silver to pull back without breaking the longer term uptrend. Same deal for gold, right? So I still favor in the short term, likely more weakness, but my bias for much higher prices in the medium to long term hasn't changed at all. I just think we might see a little bit better prices to buy within the next few days, weeks, before both explode higher, because that's what I believe they'll be doing.
I'm with you on that for sure.
Now, having to do with copper, following today's risk off, technically speaking, that coincided very nicely with the rejection of this channels trendline resistance once again. So copper remains in corrective mode, but still looking at the bigger picture in copper, for the time being, this looks just like a very healthy, orderly corrective move in a larger uptrend. So I do think that copper should resume its move to the upside sooner rather than later when this corrective move is over. Now, having to do with crude oil, and this is now important, if today's price action proves to be what we're looking at the moment, and we don't end up retracing like a big part of today's losses, then we're finally talking about a deeper correction, which is very much needed, right? Because I remind you, this is a move that started, if we're talking about the continuous, from $11 and took us from $11 to $77, right? In a matter of just a little bit more than a year, 15 months. So there was the simple corrective pattern case scenario, which was another orderly pullback within another bull flag. But so far today, we seem to be slicing through the bear flag, through the bull flag's trendline support with, quite a lot of momentum. So we confirm a break and a close below this trendline support. And in my opinion, we're finally looking at a deeper corrective move, which can unfold, more, in a more bearish type of way than a simple pullback, right? In which case, I would be looking for a longer period of depreciation and a deeper type of depreciation, or at least one of the two, if not a combination of the two. In which case, I think we can easily retrace back to 62.5, $63 easily, very, very easily. And we take it from there. So for me, today is an important day in the crude oil market for us to, decide and understand what kind of a corrective move we're looking at. That's like a general overview of what I'm looking at. Oh yeah, one more thing. We talked about yen pairs specifically 2 weeks ago when I showed all the major yen crosses and said that all of them seem to be in some kind of a corrective move lower. We talked about the euro yen. We talked about the pound yen. We talked about the Aussie yen, the Kiwi yen, so on and so forth. Now, in a similar way to what we're seeing, of course, it's early in the day in crude, it seems that some of them might be about to turn more aggressively lower than initially showing on the charts. And that is an interesting potential development, especially considering that we've been seeing these moves to the downside without USD yen aggressively moving lower. It's just a few hours ago, less than a few hours ago, actually roughly an hour ago it was, or something like that, a couple of hours ago, something like that, that USD yen started breaking through this blue channel. I had also talked about the USD yen and the potential for USD yen to move lower. And specifically, I remember saying that the way we rebounded higher looks corrective despite producing a higher high. And my intuition tells me that USD yen should be moving lower from here. And today's breakdown, if confirmed by the daily close, I think opens the door for much more weakness in all the aforementioned yen pairs, which the vast majority of them is either testing or breaking through their corrective formation. So looking like they want to more aggressively move to the downside, as I said. Here's the euro yen trying to break through this trend line support. Aussie yen has already done that. Here it is, right? Quite aggressively. Here's the Kiwi yen, which hasn't broken down from this potentially corrective channel, but it's getting close to that as well. Here's the pound yen, which is currently testing the waters below this trend line support. So basically, and if the USD yen is just starting today, I doubt that these pairs are not going to push much more lower than they've already done. So bottom line, I would be very, very careful being long any of the yen pairs at the moment with what I'm seeing as we speak. Okay. Anyhow, we had quite a few things to talk about today with all this movement. So I can now go through your questions. So shoot, what do you want us to look at? I've been listening since 2003, says Ricky. Oh, that's too many years. mRNA. So our friend Amira wants to have a look at Moderna. And Moderna, guess what? Is exploding higher. Of course, it makes sense. I mean, when the market has jitters about potential like fourth wave of COVID, of course, any company that makes like vaccines or whatever is going to explode higher because obviously that means new vaccines, so on and so forth. In any case, we had talked about the breakout in Moderna, some time ago. We talked about this little bull flag. We talked about this larger channel. We talked about this little bull flag. And now we actually even seem to be accelerating to the upside, which shows that, there is a lot more strength to come. So, I don't have much to say about Moderna. It looked bullish. It did break out some time ago, and with the type of momentum we're seeing now, it's proving that another bullish leg has started to the upside. So I would definitely not be trying to fade this move, in no way, right? So keep looking higher, significantly higher, if you're asking me. Target, the upside targets when you're at all-time highs is not an easy task, right? And we don't even have proper pullbacks to fib extent. I mean, it's a little bit of practice in vain in this case because, yeah, I mean, the last somewhat proper pullback was like, some significant time ago. So we have to start looking for like, some stupidly high extensions, right? And usually this is not something I favor. All right, so there you go, upside extensions. Currently at like 261.8% extension at 305, 361.8 at 377. But look at momentum. As I said, we can go a lot higher. So, I mean, targets here is a practice in vain, as I said. I have two advices to give you. If you're long, don't quit your long positions, right? If you're not long, what are you going to do? Chase? Yeah, I guess you can chase, but what is your risk reward? So, yeah, support should be 261 from this point on. The gap, right? This gap that we created over there. So 261 should be support. These are the things I have to say about Moderna. You're in, okay. If you're in, stay in. As simple as that. Just keep trailing your stop loss so you can start locking some of your profits. And let it ride. Momentum seems very, very healthy at the moment. So I would definitely not abandon my positions, mate. Stop is 248. Let me see, 248. Yeah, for the time being, that's a good stop. If we push even further, I would then retrace my stop loss even higher towards 261, so on and so forth. So the only thing I would be doing here if I was you and I was in this, I would just keep trailing my stop loss as time goes by. And, if this appreciation continues, and I would let it ride, honestly. You might get a lot more upside in this one, judging from the technical structure, momentum, and everything else. I think you might be in for a ride here. Look at PLTR. Sure. PLTR. Okay, last time we had a look at it. From what I see, I expected more downside. And we are seeing more downside, so that's good. So far, it's been moving as expected. Now, where to from here? Where to from here? Let's see. Now, a bullish case scenario is something like this, right? I would still wait though, right? I would still wait. Technically speaking, not such a beautiful type of situation we have here. We might have seen the low over there. There is an okay chance that that's actually the case. But on the other hand, I wouldn't want to see much lower prices because then we might just be in a more complex corrective move. Like, let's say something like this, right? That's a chance, right? Instead of that being the corrective move, we might be seeing a corrective move that looks more like this. So yeah, I mean, if that's the case, you can even see a lower low before moving higher, right? So keep that in mind. I wouldn't trade it if I had no position. I wouldn't be trading it here. I would just be, I would keep monitoring price action. Is that the ticker name, Amira? Polim, Polim. Let me have a look at it. Is any of these what you're talking about? I doubt it, right? So probably TradingView doesn't. Poly. Oh, okay, this one. Okay, so okay. Something for the bears, something for the bulls. So let me make it very, very simple here. We've broken through this bull trend, right? RSI was already showing and pointing in that direction for some time. But as long as we hold this channel, there is a possibility that this is just an orderly pullback. Now, we slice through this descending channel trendline support, then we're looking for a much deeper corrective move. So bottom line, from a risk reward perspective, you can try buying somewhere here with a rather tight stop loss, but we break through that, and then we're looking for a much larger retracement, judging by how often I have to just kill online notifications. I'm assuming that the FX market is moving significantly, so let's have a look. So that's what I think about this one, right? Let's see what's happening. Yeah, cable testing, confluence, important confluence of supports here. So, if this wants to be resolved to the upside, we should be holding this confluence of supports here, right? 200 daily moving average, this wedges trendline support, both pass previous lows, right? Both pass from here, 136.70. We break through 136.70. At the same time, we will be breaking through this trend line support in the RSI. I think we're headed, significantly lower. Significantly, I don't know how significantly, but we will definitely see some decent follow through, right? Definitely be seeing some decent follow through with 134.80 being the next downside support, right? So I think we're gonna at least be seeing 134.80 if we slice through this. Now let's have a look at equities as well. Yeah, no, the S&P still hasn't broken down from this wedge trend line support, but it's toying around with the idea. FTAL. Ooh. Yeah, this doesn't look good. This looks like the DAX actually. Right. Doesn't look good. Oh, for Christ's sake, come on. Yeah, this doesn't look good at all. Technically speaking, this now points to a retracement back to 48.60. A full retracement of the wedge. Just look at this amazingly prolonged RSI divergence as well. There we go. Yeah. So yeah, this looks very bearish at the moment. Very bearish at the moment. In the short term, at least, it looks like it wants to retrace, a lot more of what we've already seen. AUY. Oh, come on. Beep, 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 beep. AUY. Yeah, for the time being, undoubtedly bearish for the time being. Now, for how much deeper of a corrective move, I have no idea, but definitely, I think trying to buy it here is like trying to catch a falling knife, right? Yeah, that's all I have to say about it. I think you should keep looking lower. I see no reason not to. Irina, DSCT. How many, in all honesty, how many alerts has Blake added to the ticker? Okay. You really want to buy this, this is more or less where you do it. But we break through this trend line support and we're looking for, significantly lower levels, right? RSI doesn't look very healthy. It's about to attack oversold levels for the first time after, a long period of time, which is in general a bearish indication. So yeah, be very careful. We break through this trend line support, which we're currently testing, and things might get, spicy. Yeah. You like it, but in 1300s. 1410 is the next downside area of interest. But in my opinion, mate, if we break through 1410, then we're not stopping at 1300. I think the next level of interest after that is roughly at, what is it? 1220. That's what I think. My pleasure, Irina. TLT. TLT. Yeah. Nothing has changed since the last time we had a look at it. Has produced a bullish breakout from this channel. It is accelerating to the upside. Now, next upside target is this descending trend line resistance, currently passing from, what is it? Roughly 155. Let's see how it reacts from there. Okay, I think I covered everything. Yep, I did. Okay, so let's hope we see this interesting day, have some follow through, which means you should be joining Blake at the daily roundup in exactly 2 hours from now. And we will keep issuing updates, alerts, online notifications, so on and so forth. I mean, we'll have a lot to patterns in play. If this type of trading environment resumes, we'll have a lot to, talk about and analyze on. Okay. Have a wonderful rest of the day. Bye-bye.